Walt, I'd ask you what the good, the bad, and the ugly of this is, but I don't know that there's bad and probably definitely not ugly on this
I think
report.
it's just less ugly than what people were looking for. I mean, you're still talking about a company that's in revenue decline. The iPhone business is down 17%. I mean, even services, 16% is good, but it's a slowdown from last quarter. So I think it's just a matter of a company positioning themselves to return to revenue growth next quarter and perhaps earnings growth in 2020.
You raised your price target and your earnings expectations based on what the company said yesterday, though, right?
We did because China's, I think they've made the right decisions there, right? I mean, they've cut price in order to drive unit growth. As a result, the revenue decline wasn't as bad. And there was also a fear that that would impact margins. And frankly, margins stayed up fairly well, even in the product sector. Now what you have is the products or the services business represents a third of the gross profit of the company.
Right.
It's growing at 15 to 20%. So you've got this great tailwind. So even next quarter, the guidance for gross margins, which is effectively flat, there's actually an opportunity for upside there because services is lifting that gross margin. So when we fast forward to the end of 2020, that services business could be 40% of the gross profit of the company. And that's a pretty impressive changeover for this company.
Your price target is now $234. Is that 12 months from now? Is that year end?
It's a year-end price target on a forward earnings. I mean, look, part of this is the fact that the market's been rallying. It's at a market multiple now, 17.5 times. It's certainly not as attractive as it was a short while ago. 6 months ago, they were at a 25% discount to the market. Now you're at parity. Now you're just talking about a stock. Can you maintain parity with the market if you're returning to top-line growth and earnings growth next year?
What do you make of the hardware? We were talking about the earbuds or earpods and the watch. How should we think about that?
I mean, it's just another product. It's an incremental line to drive growth, but it's also keeping you within the ecosystem. There's obviously looking for services.
But it's a huge business now.
It is a huge business, but again, the focus they should be on services, just because that gross profit growth that's up there. I mean, there's a lot of things when you're in the ecosystem that
what
they
do you
want to try and
think the TV service is ultimately going to be? Is it going to be a paid service?
I think it is going to be a paid service. I think they want to make money on this. I think this is about original content for them. I don't think they're going to keep this within the Apple TV. They're going to want to push this to as many locations as possible. But I think the future for them is they have this huge checkbook to attract a lot of quality original content. And it's going to take time. But look, they have 900 million active users of iPhones. And what is Netflix got? A couple hundred million. Not that they necessarily need to be the next Netflix, but they can take that approach as opposed to what some people want them to do is go out and buy studio. They don't need to go out and buy studio. They have the time to just build up a good original content.
And having that sort of user base is why they've already been able to attract the people they've attracted. I was reading a Hollywood Reporter interview yesterday with Oprah, and she said that's why she's there. That's why she's giving up these other platforms, because she wants to be where she can reach a wide audience.
It's a great platform, and that initial launch was them giving an advertisement to the talent that's out there. Here's what we can do. Look at these high-quality people that have already signed on with us. And look, if you look at this subscription business, it grew by 30 million users on just this quarter alone, 120 over the past year.
We were just talking about News and News Plus during the commercial break. Do you think that product is going to be a success?
I mean, News Plus was a big contributor, I think, to the growth in subscriptions in this particular quarter. It's certainly something that maybe drives iPad sales. Look at iPad sales, up 20%. It hasn't grown that fast since 2013. Some of this
do you think that's a function of the news, or you think that's a News Plus, or do you think that's a function of the new iPads they rolled out?
I think it's partly News Plus as far as upgrades, but look, 50% of iPad sales are people that have never bought an iPad before. So there's perhaps some substitution from laptops going to these iPads, which are coming in varying shapes.
By the way, is that a problem? Because the iPad, I assume, is a much lower margin product relative to a laptop.
And Macs have been a success for them. They were down actually 4% this quarter. They're blaming that on some production constraints or some on the product. But you have to wonder, if iPads are plus 20% and Macs are negative 4.5%, what component of that substitution came to play during the quarter?
You know, the share buyback program has been pretty unbelievable. I think the shares were shrunk by about 8%, and now they're talking about another $75 billion in stock that they're going to be buying back. How do you even get your head around that in terms of trying to figure out what the company means, what that means to shareholders?
I mean, what it means to shareholders is that as they struggle to get net income flat or slight growth, that earnings repurchase actually makes the earnings growth look a lot better.
Right.
So it turns
Well, it
effectively.
actually is a lot better in terms of the percent of the company that you own as an individual shareholder.
Absolutely.
Profits. Yeah.
And if they're going to spend $25 billion a quarter, that buys back a lot of stock where you can buy in effectively 10% of the float in a year's time.
Is that signal that they don't have better things to do with it, or does it just signal that they are a cash machine that's kicking off so much cash?
I mean, they're still spending a ton of money on R&D. It hasn't been an acquisitive company. The largest acquisition that they've made in the past decade is Beats, and I'm not sure that that was a game changer for the company. So that's always going to be a criticism. Should they have bought Netflix 5 or 10 years ago and been in a different position today than they are if they had bought Netflix? I just don't know what is out there for them to make an acquisition to achieve the goals that they want to right now.